everyone. This is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you my European opening market comment for July 28th. Well, the FOMC statement was even more hawkish than I expected, but the market reaction was totally different. After an initial jump, the dollar actually fell against most currencies and gold rose. Well, the FOMC did adjust their statement to take into account the recent improvement in the economic data. They said that they acknowledged that the labor market has strengthened, that household spending has, quote, been growing strongly. And most importantly, they added the comment that the, quote, near-term risks to the economic outlook have diminished, unquote. This suggests that while they're not going to hike rates immediately, a rate hike is possible at some point, and the possibility is growing. We'll have to wait for the minutes to get more details on the discussion around this point. Maybe the minutes will show that they actually debated the possibility of hiking at their next meeting in September. For some reason, though, the market actually interpreted the statement as dovish. The market actually cut its expectations for the Fed funds rate over the next 3 years by 6 basis points, which is fairly substantial. The odds of a rate hike this year fell to 45% from 49% before the meeting. Rate hike expectations still haven't come back to where they were before the Brexit referendum in June, as you can see from this graph. Now, as a result, the dollar fell against most currencies. It fell particularly strongly against the yen, despite many analysts' expectations that the Bank of Japan might expand its monetary stimulus when it meets Friday morning in Tokyo. At the same time, the combination of a weaker dollar and lower rate expectations pushed gold up substantially. Now, away from the Fed, oil prices fell sharply on news of a surprise rise in U.S. inventories and production in the latest week. Inventories at the main transshipment point of Cushing, Oklahoma, also rose, which is quite worrisome. And gasoline inventories rose more than expected. A pretty miserable day for oil, which also hit the oil currencies. Now, after yesterday's busy day in the U.S., the focus today is going to be in Europe and Japan. In the Eurozone, the market will be watching the gradual unfolding of the German CPI for July. As usual, it starts with the state of Saxony announcing its figure early in the morning until finally, in the early European afternoon, the national CPI is released. The pace of increase in prices is expected to be up by just the smallest possible increment of 10 basis points, which probably wouldn't be enough to make much of an impression on the markets, particularly as oil prices are slipping back, which is going to depress inflation going forward. Now, the only U.S. indicator coming out today is the weekly initial jobless claims, so in my North American opening market comment later today, I'll discuss the big event coming up, namely the Bank of Japan meeting. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.